Hi, Jer here to remind you to like, comment, and subscribe. If you're a leftist or a socialist, you probably have a favorable view of worker co-ops. It's a form of cooperative that has captured the people's interests and imagination the most. It has even been lauded by some as the form of ownership and production that should be standard as a way to socialize ownership. But there's another kind of cooperative that has historically played a crucial part in democratic socialist organizing, but is almost entirely neglected by the modern left: the consumer cooperative. Consumer cooperatives are democratically owned enterprises owned by their consumers. The profits are distributed back to the consumer members according to how much goods or services they have bought from the cooperatives, and every member has one vote in electing the board of directors. Credit unions are the most widely spread forms of consumer cooperatives. There are 85,000 of them across the world with 280 million members, over 100 million more than a decade ago. They provide the same services as capitalist banks, but without capitalists, and they do it better. They have higher customer satisfaction and provide better rates. But perhaps even more importantly, they are incredibly resilient. During the 2008 financial crisis, not a single credit union in the world required a taxpayer bailout. In the US, the bankruptcy risk of capitalist banks was over 2.5 times higher than that of credit unions during the turmoil caused by the recklessness of Wall Street. This was despite credit unions paying their executives 10% less than capitalist banks of similar size. Credit unions have a massive, underutilized potential for left-wing organizing. For example, Vermont State Employee Credit Unions uses its capital to invest in other cooperatives, helping create an ecosystem of non-capitalist firms. Just imagine what could be achieved if all the 5.5 thousand credit unions in the United States with a combined membership of 125 million would do the same. In fact, credit unions have been a historic tool in addressing the wealth inequality caused by systemic discrimination. The very first credit union in the United States, St. Mary's Credit Union of Manchester, was founded by Quebec immigrants in the American Northeast, with the goal of assisting Franco-American communities due to them being largely denied loans by Anglo-American banks. Another exciting example of how credit unions could democratize the economy has been presented by one of the most cited computer scientists in the world, Alex Pentland, who's described an idea of how credit unions could act as data cooperatives, enabling people to withdraw their data from big tech firms and store them in data vaults, similar to how they store money in a bank account. This data could then be used to benefit the ordinary people, not the big tech oligarchs. For example, a credit union could analyze the data stored in its vault, detect that many of its members buy cat food regularly, and collectively bargain for discounts on cat food through joint purchasing. We often talk about democratizing the workplace, but what about democratizing capital management? That's exactly what credit unions do. So if you're among the 1 in 20 Americans without a bank account, or even if you do already have one, please consider joining a credit union near you. Don't let your money be managed by banks that seek only to profit off of you. Let that money be managed where you can have a voice and where your well-being is a priority.